Welcome to the Capital News. I am your host, Alex Karitis. Today is September 10th, 2019. Thank you so much for joining me. So, the title of today's podcast is Bolton Gets the Boot. National Security Advisor John Bolton, also a former ambassador to the United Nations for the United States under the George W. Bush administration, gets the boot. He is gone. Now, there is some discrepancy here. There's some poor communication from the White House, which is sort of par for the course, as to whether or not he voluntarily gave his resignation and was wanting to quit and he wanted to leave the White House, or the president, Thunder Thumbs Donald J. Trump, demanded his resignation, basically firing John Bolton. I couldn't care less what it is. I hope the president fired him, actually, but I don't care. I don't care. I wanted this guy fired months ago. Why he was there is beyond me. The only thing that I can think of as to why John Bolton was there in the White House at all, let alone the National Security Advisor, a very, very important position within the executive branch, is sort of keep your friends close but your enemies closer. Because I have to give President Donald Trump credit, at least in rhetoric. This is what he has been somewhat consistent on, even when he was campaigning to be the President of the United States, was an anti-war, anti-nation building president. So, you start scratching your head, well, then why would you bring in John Bolton, like I said, into the White House, period, but then as his national security advisor? The only thing that makes sense is he knows that John Bolton is pretty much a bad guy. He was part of the Bush administration. He is very much a proponent of American empire and imperialism and nation building, going into Iraq, going into Afghanistan, perhaps going into Iran next, meddling down there in South America, particularly with Venezuela, and a whole host of other countries and regions around the world. Keep your friends close, but your enemies closer. That is the only thing that makes any sense to me whatsoever, where Donald Trump had to pay somebody a favor for something or another, and John Bolton, I guess, was the negotiating piece, and he was there for a short period of time. Too long, again, in my period, but he's gone. I mean, I saw this news come over my cell phone this morning on a Twitter feed, and I was like, am I still dreaming, or is this Christmas? What's going on? This guy's actually gone? Thank God, believe me when I tell you. You want to talk about all of the problems that we are facing, not all of them, but a lot of the problems that we have been facing and dealing with for the past 2 decades now, since we've been over there in Afghanistan and Iraq, fall on this guy. He was an architect of this. He is a proponent, an advocate of this type of strategy. Trillions of dollars gone, tens of thousands of lives lost, thousands of lives ruined due to injuries, mental illness, anything, you name it. It's perfectly fine. It's okay. People displaced. People turned into refugees. I mean, it makes no difference. As long as the military-industrial complex gets their cut, as long as they can make their profits, everything's A-okay. That is the system. That is the swamp. So again, why Donald Trump would put somebody who is a big proponent and a big piece of the swamp right next to him makes no sense to me, unless it was keep your enemies closer. But then you have to ask yourself, well, what were they tracking? What was he doing? Get him in there, get his people in there with him, and then sort of do a little bit of spying on him and his guys to see what they're actually doing behind the scenes. I mean, look, I want this president to succeed. I want the United States of America to succeed. I want there to be peace and prosperity. That's what the Capital News is all about. Peace and prosperity and free market capitalism. Period. End of story. And the truth. The truth. As hard as it is to come by, to understand what the truth is very difficult, because we're lied to on a daily basis from politicians, the president down. It makes no difference. Republican, Democrat, liberal, conservative, we're being lied to on a daily basis. There's misinformation, there's disinformation. It's very hard to understand what's going on, because when we have these debates on the mainstream media, again, you get one idiot from the Democratic Party, you get one idiot from the Republican Party, and then they're just spewing talking points that some other idiot in their party drafted. And then they scream over each other for 5 minutes, and then it's okay, cut to commercial, and then you get another 2 idiots from the same parties to do it all over again. I mean, that's not news. You're not going to get to the truth that way. There's no real discussions as to what is ailing this country, and then the solutions that can be brought to the foreground to solve them. Believe me, there are solutions, and there are more than just the talking points from the Democratic Party and the Republican Party. That's a lot of hot air from both of them. But a lot of the things that we have been dealing with, and a lot of the things that we continue to deal with around the world, geopolitically speaking, are a result of 9/11, which we are about to, sort of commemorate here tomorrow. And John Bolton played a big hand in the Afghan policy, the Iraq policy, the Iranian policy, and a whole host of other issues. Again, trillions of dollars that we didn't have to be nation building, something that we are not supposed to be doing. We're supposed to take our marching orders from the United States Constitution. Nowhere in that document does it say to us that we are supposed to be building an empire, that we are supposed to be nation building, that we are supposed to be the policemen of the world. In fact, if you understand the founding of this country and you understand the founding documents and correspondence and speeches back and forth between our founding fathers, they warned us, they told us, do not meddle in foreign affairs. We're going to have our own problems here to deal with. Those are going to be plenty. And we're going to have to deal with them as a United States of America. We are not supposed to be the policemen of the world. We cannot afford it. We cause more problems than good. Look it up. Pay attention. Open your eyes. I mean, if you want to go all over the world, be my guest. Be my guest. Go to a gun shop, buy as many guns as you want, get as much ammunition as you want, body armor, whatever you want, get a plane ticket, and go to whatever country you think is being oppressed. Go ahead and go liberate them. Be my guest. But to send young men and women over to these countries in the name of freedom is ridiculous. It's ridiculous. And I am hoping that Donald Trump does not get us into more excursions, into more wars, especially not with Iran, not with Venezuela. We can't afford it. We can't afford it. If I can't convince you on the moral and ethical grounds of things, maybe the financial shortcomings of this country will sort of ring true to you. Oh yeah, we got a lot of debt, but we can't afford it. We got a lot of problems here. Maybe that'll ring true. Again, if it's not the moral and ethical things that are sinking into your head, with war being evil and destructive and wrong, maybe the financial part of it will say, well, we can't afford it. I don't care what it is. Just be an advocate for no war, anti-war. Be an advocate for peace. That's what we need because, again, we talk about this here all the time. Yesterday's podcast was pick a country, any country. All right? And that is just a continuation of what we've been discussing here on this podcast for months. And it's sort of been picking up pace over the past few weeks because you have the trade war with the United States and China continuing. You have a trade war between the South Koreans and the Japanese. You have the escalation over Kashmir between the Pakistanis and the Indians. You have Prime Minister Benjamin Netanyahu of Israel lobbing bombs over there in Lebanon, Lebanon responding. You have the Israelis again saying that the Iranians are breaking the deal, which they are because Donald Trump got us out of the deal, and now they're saying, well, there's no renegotiation. We're going to continue doing what we were doing before. And you have Israel saying, look, there were secret nuclear sites going on. They were breaking the rules anyway. So, I mean, it's all over the place. There's still the coup going down in Venezuela. Pick a country, any country. Except the United States. Pay no attention to what's going on here. Crumbling infrastructure. We're not going to invest here in the United States. We have to go all over the place. And then we got to blame everybody else for our problems here. We have poor structural economic policy here in this country, which has been devastating this country for generations. Let's not blame ourselves. Let's not blame our politicians. Let's not blame the institutions who have corrupted the system and are now the system. Let's not do that. Let's blame the illegal immigrants. Let's blame the Chinese for our problems, because it's easier to do that. It's much easier to point the finger across the pond and blame somebody else. It's not the right solution. In fact, it is not a solution. So to some other news, and we'll continue talking about this with John Bolton getting the boot, because this is like Christmas. And I had a tweet. I had to respond. I was talking to a family friend about a couple weeks ago saying, I'm not big on social media. Of course, having this podcast as a means to growing the podcast and my audience, I have to take to it a little bit more than I would like to. And to be perfectly honest with you, I have to get even more aggressive with it. But I just don't like it. It took me a long time to get on Facebook. I'm barely on it, but I have this Kapital News on Facebook. We're on YouTube. We're on LinkedIn. We're everywhere because we have to be. But I was telling this family friend, I said, I don't like this stuff. But, I'm on Twitter, and I like the news that comes through on it. And I've never been compelled to tweet. Never. Made no difference to me. I just like the information that comes through. Sometimes you laugh at some things. Sometimes you're interested in an article, whatever the case may be. But now we have Thunder Thumbs in the Oval Office, and I now feel compelled to tweet back to him. Like, I feel an obligation as a citizen of this country to say, enough's enough. It's so upsetting. But today, it was like Christmas, where the president was, I fired John Bolton. I'm like, it's about time. I tweet at him all the time. Maybe he's listening. Of course, I highly doubt it, but maybe he is, and I said, well, it's about time, Mr. President. Next, you got to fire Peter Navarro. #fire Navarro. And that's what I tweeted. #fire Navarro. So we'll see. And of course, Peter Navarro is his right-hand man for economic policy, more specifically trade policy. And we're going to talk about Peter Navarro here shortly, too, because he was back out in the news today. No surprise, and we predicted that pretty much yesterday. So we're going to talk about that, too. But to the markets here real quickly. The S&P gained a whopping 1 point. So you made a lot of money today. The Dow gained 74. The NASDAQ lost 3 points. And the Russell 2000 is continuing its strong rally, gaining an additional 19 points today, which is an increase of 1.2%, pretty much the same as what was gained yesterday. So what's going on there? We have the Dow Jones Transports up an additional 1.5% following its 2% rally yesterday. And the New York Stock Exchange gained another 33 points for the day. Now, the stock market rallied at the end of the day, primarily the Dow Jones Industrial Average, on what I have no idea because it was trading down for most of the day. And like we said, the S&P was relatively flat. The NASDAQ was down a lot more than what it closed at, only 3 points to the downside today. But these markets were able to catch a bid at the end of the day, which, back and forth, sometimes that's par for the course, just something to pay attention to. We have oil relatively unchanged from yesterday's podcast. We have WTI at $57.90 a barrel. And we have Brent, the international metric at $62.90. So relatively unchanged from yesterday. Gold is now trading at $1,487 an ounce. So still below that $1,500 an ounce threshold. Any type of pullback, folks, as far as I'm concerned, is an opportunity to buy and acquire more. Whether it is gold stock miners, whether it is bullion, precious, the physical asset itself. Same thing with silver, because silver is now trading at $18.08. Yesterday, during our podcast, it was below $18. So we're going to talk about what's going on in the markets here as well, because I think there's some interesting disconnects. There's something funky is going on, and we got to pay attention to this a little bit more closely than what we normally do, and we watch it like a hawk as it is. We have the U.S. 10-year Treasury gaining an additional 5% and is now yielding 1.7%. And we have the VIX relatively flat from yesterday's podcast and yesterday's trading session and is now at $15.20. So I want to talk about the continuing disconnect that we are seeing here between the big caps and the small caps, because even with the mid caps, there has not been a rally in the mid caps, but with the small caps, there has been. I mean, over the past 2 days, we're up 3% basically. So what's going on here? Is it a risk-on event? And if so, why? Why all of a sudden is there a risk-on event after the past few weeks, everybody flocking into the safe haven of U.S. Treasuries and precious metals and the bigger boys, the bigger stocks, not the small caps? So why is there all of a sudden a risk-on event? Why has the Dow Jones Transport suddenly taken off as well? And why has everybody started to sell U.S. Treasuries? It was only a couple weeks ago, we were below 1.5%. We were at 1.48% on a 10-year U.S. Treasury note. Now we're at 1.7. That is quite the rally for yields. And again, bonds, and the price of a bond and its yield are inversely related. So if the price goes up, the yield goes down and vice versa. So we're seeing a lot of selling in the bond market right now, causing the yields to go up at a time when we are anticipating that central banks, primarily the ECB and the Federal Reserve, are going to be cutting interest rates. And now we also hear from the Bank of Japan that they're getting ready to cut interest rates, but that's par for the course. That's what they've been doing for 30 years. We're not surprised with them. So are we getting mixed signals here? The market is saying, no, we want higher yields, which is kind of ironic because we have the stock market crying and throwing hissy fits for lower yields. Yet we have treasuries continuing to go up. And a lot of other financial instruments, primarily the 30-year mortgage, is tied to the 10-year U.S. Treasury note. So if that keeps going up, it's not going to bode well for people who are trying to buy a home or are trying to refinance. And that brings me to another interesting topic, too, because we have had record low interest rates and near record low mortgage rates again over the past few months, and yet we have not seen an uptick in home sales. In fact, they've been flat to down. We've seen a big surge in mortgage refinance, but we have not seen any type of surge in home buying. So is this the definition of diminishing marginal returns at play, which we talk about here all the time? I mean, this is Econ 101. It's running out of juice. Because before, following the crisis of 08-09, when you had this stimulus effect of these low interest rates and of quantitative easing, you got a bounce back in housing. And every time the Federal Reserve lowered interest rates or started to buy, more bonds, more quantitative easing, throwing more liquidity out there into the system, home ownership went up. People continued to buy houses. Now we're not seeing that. So, diminishing marginal returns, something kicking in here because prices are still going up. They're going up at a slower rate, but they are still going up. Is the Fed running out of ammo? Or are we in a situation where prospective buyers are saying, well, we are also anticipating the Federal Reserve to cut interest rates because that's what we hear on the news all the time. And we could get in today, but maybe we should wait another month or two and maybe they'll be even lower. Interest rates will be even lower. So we're going to have to pay attention to that. So that's exactly what the Federal Reserve does not want to happen. Does not want to happen. Because what they'll tell you, folks, it's always a debate with central bankers between inflation and deflation. According to them, inflation is perfectly fine. That is theft, by the way. It literally steals your purchasing power because it makes things more expensive than the way otherwise would have to be because it devalues your currency. When you go shopping, you do not go looking for inflation. You do not go looking for higher prices. You go looking for deflation. You go looking for deals. Yet if you have a conversation with a central banker or listen to them having conversations, they hate deflation. They're afraid of deflation. So that tells you right there who they're working for. They're not working for you. They're not working for the consumer because you're going shopping for deflation. You're looking for lower prices. And their argument about inflation and deflation, and primarily deflation, is, well, if deflation takes hold, then people are going to say, well, if prices are lower today and we're in some sort of deflationary downward cycle, then prices are going to be even lower tomorrow, and I will hold off my purchase today because I'm going to get an even better price tomorrow. Now, this is nonsense because people have to buy things. It makes no difference. Because conversely, their argument is, well, we need inflation, and they try to target it around 2%. All right, that's complete nonsense. It's an imaginary number that they come up with, but they think, all right, it's a slow boil. They can tolerate 2%, and we can get there eventually, blah, 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 blah. Well, then, why wouldn't the same argument hold true for that? If the consumer is going to wait to buy goods in a deflationary environment, why wouldn't everybody go out and rush to buy things in an inflationary environment? Because they know prices are going to be higher tomorrow, right? There should be no buying tomorrow. It should all be today. Of course, that's not the case. Why? Because people continuously need to buy things to sustain their livelihood, to sustain life itself. There are some things you might be able to put off a day, a couple days, a couple weeks, a couple months. But all in all, there are some basics to life where people need to go buy things. So this is why I'm telling you, we have to end the Federal Reserve. You got to get rid of all these central banks. They're the problem. They're not working for you. That was one of my first articles on the capitalnews.com. I think it actually was my first article on the capitalnews.com, where I said, in response to Jay Powell, the chairman of the Federal Reserve, I said, what Americans are you speaking of, Mr. Chairman? Because it's surely not older Americans who are on a very fixed income. It's most definitely not Americans trying to save and trying to keep money in a checking account or a savings account, trying to earn some interest, or a money market account, because they're not getting anything. But they want to continue to prime the press, to do wait and see, and now they're going to start cutting interest rates again. It's not for the betterment of the American people. It's for the betterment of major corporations. It's for the betterment of the government. It's for the betterment of the system, which gets bailed out, and everybody, the forgotten man, the average Joe and Jane out there, are going to have to flip the bill once again. This is why we have massive income inequality. This is the game that gets played. This is what they do. So now we have this dichotomy. We have the markets selling off these bonds, pushing up the yields higher, and now we are expecting the Federal Reserve to come in to buy bonds, literally buy bonds again in another round of some sort of quantitative easing to get these rates back down. You can't make this stuff up. So is this going to be some sort of short-lived rally in these risk-on assets, particularly the small caps? Because a big portion of the Russell 2000 is comprised of financial companies. And if you have increased rates, they can make more money. They can borrow at a lower rate and then pocket the difference when they lend out at a higher rate. That's why the European financial system is in collapse, because they've been dealing with negative interest rates for quite a while, and we are expecting that they are going to continue with negative interest rates. Same thing over in Japan. Their banks, their financial system is not great either. So why we want to import that here is beyond me, but you'd have to ask Thunder Thumbs, because he talks about that all the time. So, will there be an unwinding of this? Again, is this just a short-lived rally in these small-cap stocks? Because if the Federal Reserve comes to town and cuts interest rates, 25 basis points, 50 basis points, maybe even not even in September, but from September to the end of this year and through next year, if they're going to start cutting interest rates because things are continuing to slow down, then, this is just going to be a head fake. This is going to be a short-lived rally, and then we're going to be back down to the downside, because interest rates are going lower, and it's going to be more difficult for banks to make money. And by the way, we are hearing that from a number of banks. A number of banks are going to continue to cut costs, and you know what that means, ladies and gentlemen. It means more job cuts. I believe Societe Generale, a French bank, is set to cut over $600 million worth of costs. Most of that is going to be in payroll. I believe Barclays, a British bank, is also going to be laying off a sizable group of people as well, because they're not profitable. They're not. They're just not profitable. This is what we saw 10 years ago. This is what happens. They start to cut costs. I've been saying this for months. We've already hit peak earnings, basically, in these companies, peak margins. We've talked about this. Now, to preserve their margins, they're going to have to start cutting costs, and that's primarily going to take the form of layoffs. And that's exactly what we are starting to see, and we are starting to see it in the financial sector, which is a leading indicator of the market. It is an internal heartbeat to the market, and there is a divergence between the financials and the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. And that is not boding well, believe me when I tell you. But we're going to continue to pay attention to all of it, because that's what we do here at the Capital News. And like I said, we were going to talk about Peter Navarro, because he was back out there. They let him out of his cage today to go talk about nothing else than the U.S.-China trade talks. Again, they are supposed to happen at the big boys table some point next month in October. And we are supposed to have lower level discussions this month here in September. But next month, the big boys are supposed to get back to the negotiating table. The Chinese delegation is to come here to the United States, meet in Washington, D.C. But we have Peter Navarro saying, look, continuing the story that we have been told for a year and a half, that they want to make a deal. They need to make a deal. But we don't need to rush to make a deal. And this is exactly what I have been saying, and this is exactly what I brought up yesterday And isn't it funny how there is somebody from the White House coming out and sort of saying, well, look, because I said yesterday, Donald Trump and company, they had to be careful. Because, one, they might be rope-a-doped as it is. But if they make a deal, sure, there's going to be, the stock market's going to make new highs. There's pretty much no question about that. But how long will it sustain itself? Will the Federal Reserve then back off? Because everything's fine now. There's this great trade deal between the world's two largest economies. So everything's fine and dandy. But you run the risk now of maybe things not being so great because the economy, the global economy, was slowing down before this trade war even took place. The trade war is smoke and mirrors. It's just exacerbating the problems. If China and the U.S. were to strike a deal, you still got a long way, ladies and gentlemen, until November of next year, which, of course, is election time for President Donald J. Trump. What happens if the Chinese slow play him, rope-a-dope him, continue making good? We're holding up to the terms of this deal, and then, boom, some point just a couple months before, we're done. We don't like it. They're going to say the United States did something that they didn't like, and boom, that's it. Markets are going to sell off right before the election. Democrats are going to say, look, Donald Trump, he's no deal maker here. Art of the deal is a bunch of crap. He's no good. He's no closer. And Americans, do you want another 4 years of this chaos, of this back and forth? I mean, that's going to resonate with a lot of Americans, especially that close to an election if things start to deteriorate, which China would then hold the cards at that point. Now, I've also said Donald Trump, again, may want to prolong this because he gets to play it as him being the tough guy, holding out for the best deal possible for the United States of America. He'll continue with his BS story that China's paying the tariffs, not U.S. businesses, not U.S. consumers, and that the farmers are perfectly fine. Actually, they're even better than they were before because now we're bailing them out, which is, of course, is complete nonsense. But he will continue with that narrative, and he'll just play the strongman. And he'll say, look, now if I win, the Chinese are playing a risky game. They think sleepy Joe Biden's going to win, crazy Bernie, Pocahontas, Spartacus, whatever idiot they think is going to come in here, and they're just going to have a field day with them. Well, they're wrong because Donald J. Trump is going to win, and now they are really going to have to pay the price. That's going to resonate with his base. It has been resonating with his base. All right? So Donald Trump very much wants a boogeyman, and the more credible that boogeyman, the more credible Donald Trump becomes. So you got Peter Navarro out there saying, look, we're in no hurry, but China wants to make a deal. I thought trade wars were easy to win. I thought they wanted this locked up. And the other thing, we now have an article from the South China Morning Post. I've read multiple articles on previous podcasts here stating that China is willing to come to the table, which we already know, so they're continuing their narrative too, and that China will come and they will consider purchasing more U.S. agricultural products. Again, there's no creativity in this storyline. This is what we've been told for months, over a year, and nothing has taken place except further escalation, further division. I mean, right now, the Chinese aren't buying any U.S. agricultural products, or very, very little. I mean, if they were to buy the corn out of my refrigerator, they would be buying more U.S. agricultural products. So I don't know what they're talking about. This is just another story that they're putting out there. I don't know, to pump the markets, to manipulate the markets. It's on both sides, folks. I'm telling you. This is ridiculous, and nobody calls them out. I don't get it. The Democrats are evidently too stupid to call the president out on this, to say it's market manipulation with all these tweets, with all of him sending his lackeys out there. If the market's in a down day, oh, yep, everything's fine. We're going to get a deal. I mean, look, it's ridiculous. As far as I'm concerned, it's market manipulation. But, hey, whatever. That's my opinion. You can agree, disagree, whatever. But just to wrap this podcast up, John Bolton gets the boot, and I hope Peter Navarro gets the boot next. I mean, this is a good day for the United States of America. We are by no means out of the woods. I mean, nothing has been solved. We're still staging a coup down there in Venezuela. We still saber-rattling with Iran. We still have Benjamin Netanyahu over in Israel saber-rattling with Lebanon and Iran. I mean, there's still a whole host of problems, but at least this guy is gone. Now we'll see what the president does. If he takes I don't know how to put it. I don't know if he's going to... Well, I know he's not going to step back from Iran. We know this because we had Secretaries Mnuchin and Pompeo of the Treasury and the State Department, respectively, out there this afternoon, following the news of John Bolton being fired, that the campaign of maximum pressure against the Iranians is going to continue. All of those sanctions are going to continue. And comically, if you will, the Iranians put out a statement that they are claiming responsibility for John Bolton being fired, because they are basically saying this campaign of maximum pressure was the brainchild of John Bolton, and John Bolton is gone. That means the Iranian people, the Iranian regime is stronger. We can withstand these sanctions, and the United States has to change course, and that's why they got rid of John Bolton. So, I mean, it's just, again, a game of world poker, strong men all over the place. Who's bluffing? Who has the cards? Who's actually going to do something remains to be seen. But there is a lot of dry kindling out there with a lot of idiots running around with matches, and this thing could go up at any moment. So stay diversified, stay vigilant, and stay with the Kapital News. Thank you so much for joining me. Please like, share, subscribe, and get the word out. You know, I don't care where you're listening, whether it's YouTube, whether it's thecapitalnews.com. Please just take a quick second to subscribe or like this channel and these podcasts. It does help the podcast grow, and I truly appreciate it. So this is the Kapital News. I am Alex Koritis. Godspeed.